Good morning, Wanaka. I hope you had good coffee before coming to the morning sessions. Thank you, ETBFSI, for having me here and giving me this opportunity to interact and talk to you on certain things which are of great relevance for our country and the industry which we are talking about. Thank you, Amol, for kind of igniting, and particularly the end part where you have very well listed those 5 challenges. So let me take it from there. I don't have any presentation or something. I have just some points which I may not be so coherent, but I will try to make some sense out of it. So first of all, where are we on the growth story? That what are we on talking about the growth story? What should we do? So I will divide it maybe a task for you throughout the day, that whatever we do, if we can think of short term, medium term and long term, because short term we need to see the next couple of quarters because of what was flagged, the uncertainty. So you have to guard as well as you should decide not to come in the way of growth. Then comes the medium term, that you can take it for after hopefully a couple of quarters, in 3 quarters things may settle down or you will have better idea as business and economy, so that 1 to 3 years time frame, that what to do. And then like you have done 5 years, 3 years for this event, 5 years for ETBFSI. So some vision for you for the next 5 years, that where would you like to see yourself, and immediately while looking at the numbers and all, I can tell you your target should be in the 5 years time, that can you hit that 100 lakh crore, that is 100 trillion in rupee. Right now maybe you are somewhere around 50 lakh crore, whatever is the reported NBFC number. We have positive vibes, we have uncertainties, we have negative vibes. So first let us talk on the size, scale and assets, what you are looking at. We talk about democratization of financial market. We have gone a long way in maybe in last 10 years thanks to the initiatives taken, and particularly on the digital side. But still that democratization on, if you look at the asset side, it is slightly skewed, because if you look at only NBFC sector itself in that classification of large, medium and others, and if I may say regulated and self-regulated categories, you will find that you may have in high 90s% of the total NBFCs falling into the non-regulated or self-regulated categories, and maybe single-digit number in the regulated categories who are large and medium NBFCs. But if you look at the asset size, in the reported asset size, it may be the reverse percentage. So the challenge here is that how can we use these single-digit NBFCs who are large and small to actually work towards democratization and use hub and spoke model or whatever you call, and increase the balance sheet of those entities who are more closer to your clients, more closer to people, and therefore by using technology, can you identify some of them and reduce the balance sheet on that size, that you move away from 95% of asset size to maybe 85% of asset size, and move them from 4 to 5% to 15%. But even with, I can tell you, even with the reduced 85% size, the cake will grow, the pie will grow, and therefore your business will grow manyfold, because there is the unmet demand. You have a lot of studies about this, and I will not like to put numbers, but yes, there are numbers in the market floating around, that what are the unmet demands of, particularly forget other sectors, just BSMEs. In BSMEs itself, there are studies of 20 to 25 lakh crore of unmet demand at present. And in 5 years' time, you can imagine that with the growth in economy, where it will take you. Now, if you are looking towards expansion, then you have to look at your own books of account, that where are you? We have moved way forward now. I still remember sitting on those rooms in my earlier assignment back in 2018, when everyone was very harsh on NBFCs and we were having experts talking about that whether this is the end of it. Because there was major problem in a particular NBFCs and everyone, your lender, everyone was losing faith in that system. But imagine how you have moved on. That is called, we often hear this phrase, resilience, but it is actually demonstrated by you people in the last 5 years. If you look at 2019 and 2024, you have doubled in 5 years. So when I say that in next 5 years you should double, in fact, I am slightly conservative that the scope is more so. So one is that why you should look forward in a more aggressive manner. The second one is on your capital side, that maybe the regulatory capital may be needed is 15% of your books, what you call CRAR and all. But at aggregate level, you are presently quarter to quarter fluctuations are there, but the last reported figure was 25 to 26%. So you have headroom, you have buffer for expansion of your balance sheet. So therefore, there is a demand side gap, which I talked about, 20 to 25 lakh crore. And from the supply side, you have that capital buffer with you. So if you use right technology, right risk management, and right analysis, you can actually go for that kind of expansion. And the government and the regulator, I am sure, will be coming up with various products and tools to help you in moving towards that. Some of those tools are already in offering. In the last monetary policy, you would have seen that it has already come up that there was a lot of talk on co-lending and all. So it has already come up. Maybe it will further facilitate you to become part of, if still people think NBFC is not part of the mainstream or shadow banking, it will allow you to integrate with the main banking sector. The third point, which is slightly disturbing but is still relevant now, is how will you finance your expansion? And there I see that if I put together the bank's exposure to NBFCs, it is still in the range of 45%. It is not direct lending from banks, but even through debentures holding and all those things, because in business you know that banks may take decisions how to invest or how to lend to NBFC. So you have to diversify. You have, some of you are deposit taking, and some of you have good credit rating. So you can think of that in the falling interest rate scenario now, which hopefully will be there in the next cycle. How should you encourage your depositors with that delta? Because you don't have to put that your net interest margin as high as the heavily regulated, let us say, banking sector. So can you reduce your net interest margin by giving incentive to depositors or investors and passing on more benefit to your lender at a prudent rate, so that you cut down on your margin and help both sides of the spectrum and thereby catalyze that energy into expansion of your balance sheet? Because ultimately the bottom lines will matter. It will not that what is your net interest margin, but as long as you are growing at 17-18%, which is the recent trend, it should be fine to finance your future expansion and the capital buffer. Now, I comes to the user side, that what are your target group, housing, retail, and let us take MSME and compare that with how in the NBFC sector, if I may put NABARD and SIDBI also into that category, how have we not expanded and met the need of MSMEs in the whole scenario? Agriculture and allied, that is primary sector, if I put it, may be contributing 17-18% of the economy. MSME sector, whatever you take, GDP, GVA, exports, it ranges from 30 to 45%. In exports, it is more than 45%. In GVA, GDP, it will be around 30%. Now you look at the SIDBI exposure, because they are supposed to be the pre-financing or helping NBFCs to move into that MSME sector. They may be around 1.5 lakh crore, which is certainly very suboptimal compared to NABARD, which may be at 6 to 7 lakh crore. So one NBFC which is looking at a sector which is contributing 17-18% of the economy is having 6 to 7 lakh crore of exposure to refinance and be the kind of lender of the last resort. Whereas the other NBFC which is looking at industry and particularly MSMEs, they are at 1/6 or maybe 1/5, whereas the contribution to the economy is double. So can you, as an organization, can you make that voice louder? That how to strengthen SIDBI, how to increase the balance sheet or the capital of SIDBI so that you have an opening there to reach out to MSMEs. Second is that we are moving, and which is very good, what people call democratization, that for the first time in last maybe 70-75 years, we are actually moving from asset-based lending to transaction-based lending. Now that is very important for fintech and NBFCs to have data access, and then that data access with responsibilities. Just a couple of examples that how, as a taxman, incidentally, I worked in my now 26 years of service. It so happened that I worked for 17 years in finance and trade sector. Now, when we try to collect more revenue for the government, particularly after the GST, you will be amazed that how that data crunching has helped in improving the GST collection to go up and thereby allowing us to reduce some of the rates. Same thing can happen in the NBFC lending if you can have the particular data, and there comes the role of the aggregator. That if you have that model up and running, which is the aggregator model, and some of you are maybe working as aggregator, I don't know whether they are present today here or not, but you can think of that what sort of data you need. I will just give you two examples, GST and electricity. If you can get hold of these two in some manner or other, the GST data and electricity data, it will, I can tell you, it will, only these two data will allow you to reach you to the potential client who are in the formal sector, who are doing proper business, and they are consuming energy of that level. You can have a benchmark that this industry or this sector cannot consume energy more than X percentage of their turnover, and you can decipher that turnover and you can go ahead with your lending. And I can tell you that electricity billing is the most cleanest data today, at least in this part of the world. Some of the things which I want to end by cautioning you that what Amol also referred to is the present geopolitical scenario. In the present scenario, you will face two problems. Financing part is fine, that okay, you will have experts to know that, but how many of the NBFCs will have access to economists who are able to run you models on real-time basis? And there the two threats are, some of your clients who are exporters, certainly you will find that they are out of order book because of whatever is happening in the world. The positive of that, some of your clients may certainly have to ramp up their products because they have an order in timeline. Before something kicks in, they have to deliver. They have to put what they call on ship so that they can escape that. Are you ready for that kind of analysis and jack up? Because if one of your customer is running, let us say, 100 units, one shift, if they have capacity and they can run two shifts, what they will need you that immediately, that bridge financing or working capital. Are you ready to do that? Because you have this problem of asset liability mismatch. Your liabilities are different maturity, assets are different maturity. So do you have a model to do that? On the other side, which is a larger universe, because someone can say that no, my client is not the exporter, so therefore I am safe. No. Even the domestic players will face this problem of dumping, because something going to that disturbed market will certainly start finding place in other markets, other geographies of the world. And then you will find that your customer who was doing very fine with his domestic or her domestic business, suddenly they are finding that they are no more competitive, forget export market, even in the domestic market. So are you alert in that sense to raise alarm, to take it to the regulators or what you call the Director General of Foreign Trade or in Ministry of Commerce, that this sector is coming under stress because of a price crash or dumping? So I would, time is up, so I will stop at that because you must be eagerly waiting to hear from experts. I will not take more time. Thank you for having me and wish you all good luck. Thank you.